All right, let's jump into things. A whole bunch of stuff sort of happening at the moment, and that. So basically, just seeing the market absolutely get trounced overnight, and that. Mainly, it seems from what I can tell. Look, we've heard a couple of things happening in that. We had the Colombia 5 minute debacle. Obviously, sort of like where they they were refusing to take back their illegal immigrants basically that had gone through the US. That lasted all of like maybe an hour or two. Because of course, Trump just came out and I mean, it's no shocker. He's just like, oh, you're not going to take them? That's fine. Boom, here, have some tariffs instead. And they're like, okay, what's the worst of the two? Is it taking back a couple of these guys, or is it sort of screwing the rest of the economy? Well, obviously, bang, and they folded pretty quickly with that, which I think actually is probably a good little sort of tester for the market, because obviously, Colombia is not a major economy that, the FX markets really sort of, FX world is really sort of paying too close attention to in terms of sort of like, I mean, if there's tariffs over there, well, it doesn't have broad reaching repercussions directly. Indirectly, it obviously just sort of shows and displays that, Trump's obviously not stuffing around. And it's sort of like a little bit of a canary for the rest of the market should they decide to go any of these other sort of major economies, Mexico or, I mean, not too many people are coming as a legal immigrant from Canada, but, along these sort of lines, should they not play ball, he's willing to just pull the trigger and pull the trigger without thought, not without thought, but without sort of like endless discussions and, sort of talks about feelings and all this kind of stuff. It's a very matter of fact response that you're going to get should you not play ball with the US. So I think it's actually almost sort of something good that we can sort of take away from that because it's shown their hand without destroying the market. Well, that was one part of it all. The other part of it all seems to be this sort of Deepseek thing that seems to be all over the news, all the sort of talk and that at the moment, mainly sort of impacting, obviously, equity markets. Equity markets got absolutely trounced yesterday. Nasdaq obviously got absolutely obliterated. ES and sort of like all the majors basically just got an absolute walloping from this. And from what I could sort of do, so honestly I didn't give it enough sort of credit at the time. But really, it sort of seems almost to be uh, the idea that basically this thing is better and cheaper and developed at a lower cost, and well, that's free, than what the West can provide. And from the West, it's sort of whatever it is, ChatGPT or something. This thing seems to look. I'm not big into this sort of stuff at all. Obviously, I'm aware of it, but it's not really sort of my wheelhouse. But this thing seems to be have some sort of deeper level of sort of reasoning and thought process put into it. Actually, yeah, I saw it sort of like it's a number one downloaded thing. So got to get on there and have a look. So I've downloaded it. Seems pretty good, for what it is. But yeah, look, as far as sort of how much impact it'll have over the market, which is obviously sort of what I kind of really care about. Look, I think it's definitely sort of a bit of a humbling moment for certainly sort of like for the tech stocks and the US in the sense of they thought they were untouchable. Nvidia's worth whatever umpty trillions or whatever it is. It lost at one stage. I saw, I don't know where it closed or anything, but it was down 14%, which across the board equates to a lot of money. So it's got the market scared, and it's got sort of people going, okay, hold on, wait, you know what? It's a reality check basically for them. So yeah, that's probably most likely the sort of full extent of the impact. As to sort of um, how sustained the move may be, I don't know if it's not something that's necessarily, oh wow, that's it, change the landscape kind of stuff. I think, it certainly shook a lot of people, and you know what I mean. I think it sucked in a lot of people, but I think these kind of things maybe sort of like you may not sort of recover so quickly, but certainly I think there's probably room to grow a little bit. So just bear with me one sec. Room to grow a little bit with just fixing a few positions. Room to grow with um, sorry, lost track of thought of that. I can't do two things at once. Um, Room for a bit of recovery there. I don't think it's going to change the landscape. I don't think all of a sudden now we're going to see flight to the US dollar and US dollar make new highs off the back of a Chinese yeah, AI app. I think it's certainly something to take into consideration and something for the market to sort of ponder and think about. But, I think that this would just be more of a sort of buy the dip sort of situation. Obviously, we've got to see what happens with DXY when it comes online in what is it, about an hour or so. And I imagine a little bit of a gap up on this, just based off the price actions we've seen early trade at the moment. Like Aussie's just dropped off about, geez, almost 40 points in 40 minutes. Finding a little bit of a base now at the moment. So we'll sort of see back above 62.70, we may see a little bit of a further recovery. But certainly, yeah, look, it's wide reaching, this kind of sort of reaction from this app kind of thing that's come out. So on top of this as well, we've got Trump talking at the moment. So got a couple of little, there we go here. There's Trump's comments down here. Boom, boom, boom. This Besant, that's his name, Scott Besant, and that this guy, Treasury dude, and that sort of talking about sort of global tariffs, these kind of things are sort of they again. He was saying, I saw one thing sort of saying um, as high as sort of 20% potentially on global tariffs. So, what I mean, this is a pretty strong sort of talk on this sort of stuff, and of course, tariffs are the sort of buzzword at the moment. Tariffs. Okay, market sort of reacts and shoots around and does a little bit of this and that. So I just got to close some positions. Yeah, beautiful. Um, so yeah, a whole heap of stuff happening at the moment. On top of that, we got ECB this week. On top of that, we got FOMC this week. So a lot of stuff sort of happening. Um, Basically, we saw gold as of the weekend coming into this time frame, basically testing all-time highs, high time frame resistance zone. So I did sort of say that, look, we're not broken out yet because, of course, we're up in here. We know that the sellers are sitting here. We know that this is, all-time highs. So there's a lot to sort of take away from this. Though, this breakout has been beautiful. It's had a nice little run. Now we can start to sort of go, okay, look, it's chilled off a little bit from these levels. Where's it going to sort of sit? I'm seeing Aussie sort of push back to 20, geez, I swear it's a bit dyslexia, 62.70 at this point now as well. So we are seeing a little bit of a recovery as I sort of thought. So typically these little sharp move downs will see a pretty nice little sort of recovery in that with it all because it mainly just stops and it's fear that's sort of running it. You're not seeing an exchange of prices on the way down. It's just one-way traffic, one-way trade, and it's sort of moving down with it all. So keeping an eye on this one, but I've taken a couple of positions on this dip on Aussie, so to see if we can get a little bit of a recovery sort of moving through. But anyway, back onto gold. So yeah, look, let's clear up a few of these fibs, see where we're at with it all. We can drag this because we've got a new high through here. So look, from this breakout move, from the bottom of, basically back at this rising support, was this December, mid-December basically, it's been a pretty much one-way trade moving up through here. Even with this pullback, which is, understandable, we're back at the 23%. So we're still very much in the high time frame zone over here. What we could be seeing a little bit here is potentially a head and shoulders setting up over here. 62 would be the right shoulder if we do see that sort of move up there. A bit of a sort of wonky, but more or less straight headline, neckline at 37. So I wouldn't be surprised if we see a little bit of a push up on gold here. I still am in the camp of new all-time highs, but with FOMC coming this week, I don't expect any sort of major breakouts prior to that. But, we're yet to see. We'll see how these sort of things sort of play out. If we do get a move up towards 62, be taking some profits around this level here. That way, then we can sort of be sort of covered, basically, just in case we do sort of come back down for a bit of a right shoulder test. A second effort through 37 or 35, 30, that kind of area through here, what would be the neckline, opens you up to, obviously a bit of a deeper sort of pullback, probably coming depending where you want to put your neckline. Measure move here. Would be looking at probably a move back down in line with these previous supports and the start of this last little wave of a run, probably testing around 27. So, if we get back down over here, I'd probably be looking to have another shot long. But should we break 37? Look, you've got levels of support obviously at 20, 27, 20 and that, but I would say you'd probably be seeing a little bit of a head and shoulders play out through this area here. Should we move up and then back down through here? So that requires a move to 60, 61, 62 first, and then another move down through 37. If we just continue to pull back through this zone here, well, that obviously negates the head and shoulders. And it just sort of means that then we're sort of looking for where we might see a bit of a bounce. And, I think, again, around that sort of 27.20 would probably be the next sort of support zone just underneath here. That's where I'd be sort of looking for possibly a little bit of support to sort of come in. But I wouldn't be surprised. I mean, this is on the 4 hour. We're back to oversold. You've got, second little 4 hour candle breaking a little bit higher. You want to see this push up. We want to get it back above sort of 27.50. Kind of means that we're probably going to be moving back up towards that sort of 57 to 60 zone. And then we sort of look what happens with the market from there. But yeah, certainly still very bullish. I mean, as I said, it's up around the 23%, which is very, like, even if it does come back down to these 38% retracement, this is still a bullish pullback. You know what I mean? We're testing all-time highs. You got to give that sort of credit. I mean, look, at the same time, I did say over the weekend that, major downsides could see this turn into a major zone. I don't think it's going to, sorry, major range, but I don't think it's going to be something that we're going to be playing off. So we'll just, see how this sort of session plays out. Wait for DXY to get online. Pretty light on the news through Asia today as well. So if we do start to catch a move, I think we may see a bit of a sort of continued move through there as well. All right, Aussie. As I said, Aussie just got absolutely crunched in the last sort of hour or so. Sort of opened up, or kind of opened up, came back online after that little sort of brief pause. 95 straight down to 57. That's 40 points straight back down. You're seeing the support come in. We're at kind of very bottom of these wicks, where we've sort of seen them more recently, finding a new little support just down in this zone here. So, look, I think that's a line in the sand for it. I think if you break underneath that, then we're definitely looking a little bit lower. I'd probably negate this level here. I'd probably move this down. I'd probably be looking for buyers probably around 62.30, which we got up to. I mean, look, we rejected exactly where we kind of thought we would, up in this little red zone over here. Pullback, made a second effort, obviously failed to sort of get back and hold above 63. So yeah, obviously with a failure to hold up above there with these new headlines, yada yada yada, bang, Aussie very much on the back foot there. But 40-point drop is quite. I mean, look, it's pretty big on most things, but certainly for Aussie, that's quite a substantial one-way drop. If you have a look at this on that's just bang like a stone rocking down there. So look, we're back into this lower support area that we just popped in there a second ago. So we can see that the buyers have valued it here a few times. So it means that sort of like, again, look, first time into it, well, what are they doing? They're buying it up again. Like, that's always going to happen. It doesn't mean it's going to hold, but it means that the market's obviously sort of thought that this is a fair value for it. I mean, we know that the sort of 60 line is generally a pretty strong reoccurring line with Aussie. So that's obviously sort of where we're going to sort of see them try and hold. You can see this little support through here that gave way. So this is kind of where we're at the moment. You want to hold above 55, you get it back above 75, and then you may sort of look back up to a test of the 90s. But for the moment, I would say you're probably looking, this is going to be developing as a range through here, and it gives us that midway point that we can work with as well. So breakout box through here. So should it sort of hold this lower level here, you're looking for 75 for a confirmation to get back up into the top half, and again 92 is going to be your profit area through there, just for this little range. I think a break of these two levels here, you could probably pop that a little bit higher here, but 95 and 55, which is a 40-point range, which is a decent range to sort of work with. I think a break of these two outside levels is what's going to give us next direction. Next direction, probably coming down, as I said, 62.30 on the downside. Didn't quite technically close the gap down from yesterday, so everything gapped down quite hard. And obviously, it fought its way up, but not quite there yet. Got a little bit of a resistance coming through here. So yeah, see if we can make this into a channel at all. Yeah, we'll see how we go. I'll keep it there for the moment. I'm not a big fan of this one, but again, if should we sort of start to see a little bit of a rally or a push up with this, I think this may be an area that we could sort of work off. Should it actually find some buyers here? This is having a look 30-minute, the 1 hour. Neither of the RSIs are looking particularly good there. But again, we'll have to sort of wait to see. We've got about 45 minutes in that, and we'll see DXY come online. Give us a bit more of an idea about what's happening. But certainly for the moment, it's very much, yeah, smashing down. I'd expect a probably fairly chunky little gap up on DXY on open here. So flip across, a good segue to DXY. Should this be a little channel that we've been working off, which, you know, it's got a couple of touches around this area over here. As I said, a little bit of a gap up here is probably expected. We could see a little bit of a push higher. Above yesterday's levels, 107.85, that opens it up to a push and test of this topside falling resistance. As I said, I don't think this most recent stuff is the kind of going to be the catalyst that sort of really changes excuse me, that sort of changes everything with the market, and all of a sudden now that's it. US dollars going to new highs. Look, anything can happen, 100%. But I think sort of still the same underlying thing in which that we've got US dollar kind of Trump wants a weaker US dollar. They want to they want their sort of rates down. Obviously we've got FOMC this week. It's pretty much widely expected it's going to be a hold. I think we're going to be seeing some dovish talk, and with dovish talk, and also, you know, then wanting the rates out. I think the market's speaking by sort of this break of the wedge, the pullback through here. I think you need to honour this a little bit further. As I said, I've got my sort of price targets just down. Well, first price targets 105, 105.60 and change, and I think that this will play out. So this is what I'm sort of targeting. So with that, obviously, if we get these pushes up over here, don't need to be first one into the trade, but certainly just close a few positions again there. Don't need to be first one into the trade, but I think these are going to be sell the rip kind of moves. I think this is sort of, you know, all these occasions where we see these flaps, because obviously, you know, I mean, as cliche as it is, nothing goes in a straight line. Well, this very evident that it isn't. You get a couple of little headlines and it just absolutely freaks the market out, smashes stops in all directions, and then we sort of see things kind of revert back to the general sort of theme. And the general theme is, at least short term to medium term, a weakening of the US dollar. So if we see the little rips up, we just know we can sort of, well, I'm trying to play off the idea that they're going to be temporary. I mean, things can change. I mean, that's why we have confirmation lines. But, you know what I mean? Like, you got to sort of just act on those ones and sort of say, look, you know, as this goes up, it's actually giving me a cheaper option to buy some of these assets at a cheaper price because it's just a temporary pain, opposed to a shift in the, what I call a shift in the landscape. And sort of like, you know, people need to sort of, you know, obviously trade accordingly for that. So, yeah, we'll see what happens with DXY as it sort of comes online. I'm expecting a little bit of a sort of a move up here. I'll put an alert just above this one here. So that'll be a weekly high. So to test channel resistance. So you got to let this one sort of filter through and play out a little bit. But yeah, see if we put this on the 4 hour. Yeah, it's a bit hard to tell with these things because obviously it's not online yet. But based off all the other things you're seeing, Euro. I mean, Euro is pretty much a one-to-one with DXY in the other direction. So you know, if you want to have a little look inside where potentially you might be seeing DXY open up, where's the Euro going here? You can go bang, and that's obviously big fat gap down. Trying to find a little bit of support. Okay, off the lows, but it's certainly not right back up to the top there. So I'd imagine we'd probably see a little bit of a gap on DXY just based off that. All right, so based on this, as I said, gap up over here, I would say sort of take out these lows of this little bounce here. Excuse me, we just have a little bit of a sort of further dribble down. Nothing too profound with that, looking lower. I think that's pretty much what you can be sort of expecting through here. All right, move along. So we got silver, still sort of silver trading very heavy. Look, it's just very much underperforming. It had this nice little breakout. It was very similar, as we called the other day, for that little area. Similar sort of price action to gold's breakout, but obviously failed, bang. Did actually test out the bottom side of this range, obviously, overnight. Bounced up, managed to save itself above the support area and back inside the range. So should we see this stuff sort of continue on a little bit, we could say, look, on with this little move through here. Top side now being 30.60 would be your sort of little short-term resistance, take profit sort of area. Above that, looking at 31 again, or 30.90, that ballpark, the 10-cent range there. Again, still breakout remains the same, 31 and above. And then you sort of look to enact a couple of these moves, which obviously are now moving like this, moving like this. So that's your top side moves. I think sort of any sort of move back down and a close outside this range really is going to be seen as a little bit of a failed breakout attempt, because this is 1, 2, 3 with back tests as well, attempts to break higher. If the sellers are still just going, nah, don't care, despite all that, we're still going to push it back down, you're looking at 29.50, a break at 29.50, you're looking at 28.80. So certainly some downside should this sort of continue to sort of dribble down here a little bit. Put this onto the daily, just have a look. Yeah, daily RSI is not looking particularly great here. You can see it's certainly like, look, it's consolidating near this breakout area, but this range, the little breakout box, that's what's going to give us the direction. A close on the outside of that. So again, we're just going to have to wait to sort of see what happens. If we have a quick look at the gold-silver ratio while we're doing this as well, you can see that this certainly, look, broke to the top side. It's funny, I called this as a right shoulder at this point here. Worked perfectly, neckline, set up for it, and then bang, pushed up. Right shoulder, well, double right shoulder, I should say here. Hadn't quite negated it, but obviously since we had this little falling resistance and it broke out, took out those highs, took out the highs, took out all those highs, that's obviously negated that move. And really that was a sort of little bit of a sort of oversight of mine, because, realistically we had this move coming up through here. And this obviously turned in, opposed to being, head and shoulders, turned into being more of a consolidation, a little triangle consolidation here. And that obviously favors the direction that it sort of came into. Favors the direction that it actually sort of came into the consolidation. So that was a little oversight of mine. Well, it wasn't so much of an oversight. I sort of like, as I said, the head and shoulders looked plausible. But when it started to move up here, particularly with this candle here with the breakout, that's when things needed to shift a little bit more. And that's why we've seen silver underperform. Look, it's coming into a little bit overbought. It's not quite there yet. Obviously finding resistance where we expect it to. But a break above 92, if you're looking at silver, I would say, there's a good chance we're probably going to see silver take a bit of a whack as it goes up over here. Gold's holding up, obviously near all-time highs. And we are finding 1, 2, this is like kind of 3. Look, the fact that these are turning into little small candles, small bodies, with the larger sort of rejection there, you could see this potentially roll over and at least see an effort to sort of move back down here. But where we've got this alert, that's where you want to sort of see it back underneath if you're going to see recovery, particularly in silver. But obviously, I think the metals will both sort of recover a little bit. Should we sort of see a little bit of a rollover? But I think this is kind of what you want to look for here. Look, I put that above the wick over there. That's the zone that you want to see traded sort of through. At the moment, it's obviously very much teasing a push to the top side here, which could favour, well, of the two metals, will favour gold. but generally putting a little bit of pressure on the metals market. You kind of want to see, for gold and silver both to be running concurrently, you kind of want to see it more moving to the downside, where silver will outperform gold in those sort of situations. All right, flip along. We've got China. So China, like, as I said, got very close to this price target. You know what I mean? This is just an area of supports that I sort of put through here. I mean, obviously in hindsight, 2020, you can see that they moved up a little bit higher. That's all right. Look, you know what I mean? That's very close to the price target. We're talking, a couple of pips really. And the fact that the market has sort of bounced a little bit from this area, well, that's not too much of a shocker, too much of a surprise. As I said, look, a number of these sort of things happening concurrently. The Deepseek thing, which is out of China, which makes China actually potentially a little bit of a, okay, maybe they do have something to offer that might need to be smacked on the nose. So just bear with us 1 second. And massage some positions. Um, so yeah, we do have sort of all of a sudden China has something that could be perceived as some sort of threat, which is this Deepseek thing. That's playing into it. The fact that they're talking about global tariffs, that's playing into it. The fact that if they don't play ball with the US has shown with Colombia as an example that they're happy to sort of just smack anybody on the nose, that plays into it. These kind of things obviously would get the market a little bit more worried about the yuan. But you got to see it. I mean, you have sort of broken some key levels. It's come down, it's come down. This is the area we want to see underneath for a confirmation. We know this first price target was down here, more or less here to hit that price target, and we've seen it, okay, a little bit of a bounce. Again, you come down here, realistically, look, I should put this, just to be safe, let's move that. For some reason, I can't move the alert. Okay, whatever. I'll change it later. We'll do this one here. Okay, whatever. Point being, underneath these wicks over here. Get down underneath there. We look for the price target. Price target's obviously on that scale, because it's just going to be that rising support coming through this zone over there as to sort of where we may sort of get a bit of a clip for that. So look, you are seeing a little bit of a bounce back up of this, obviously. Back above 730, we got to consider things a little bit. We do have a bit of a sort of previous support resistance over here, so we may expect a little bit of a sort of a move from up over here. But I think this is going to be very much tariff dependent, and also this see what the actual true fallout of this Deepseek thing is. As I said, I didn't really give it much. It's not really my area, but I didn't give it much credit when it was first happening. Like I saw equity markets get absolutely obliterated yesterday. Actually took some decent positions on S&P, and caught a nice bounce. Of course, as I do. Didn't maximize, but we did all right. Certainly did okay. But yeah, you see the bounce on that. It's like 100 and something. Yeah, we'll flip across here. This is the area that I bought yesterday. It's on a different chart that I normally do, but I got down here somewhere in the zone over here. A couple of positions like down here, instead of out here, out here, and then was this middle of the night? No, I was all out by this point, so I captured this part here, and then which is decent. That's my style, and that I'm in and out, this kind of thing. But of course, you think, oh, stops to even, could have done this, but again, could have bought here and put stops to even and or whatever. You know what I mean? There's a lot of people that got obliterated in this period. So anyway, I'm not complaining. So back on to what we were saying, China. Yeah, look, we've seen this absolutely take off hard this morning. And this is what I'm talking about here, because if you look at this is on a shorter time frame here. This is just on open. This moved back up here, come 10 o'clock. As I said, this is when Aussie dropped 40 points as well. This is obviously something's going on, China related with it, which is obviously tariff stuff, as I said a second ago, and I'm repeating myself, but it's the tariff stuff. or potential sort of tariff stuff with them. It's the fact that they've actually got something that needs to be addressed, which is this Deepseek thing and AI as a whole coming out of China. These are the reasons that people are thinking, oh shit, hold on, wait, maybe the yuan may be in the sights, the targets as well again. So we've seen a little bit of a sell-off with the yuan, which is obviously up in this direction on this pair. And yeah, it's coming back into yesterday's resistance levels. So we'll see how that sort of plays out. See how sort of sustained this move is. All right, and copper. Copper actually, yeah, interesting one this morning because it's sort of this early sort of spike up here, and obviously it's been knocked on the nose a little bit. Where are we on here? 30-minute. So yeah, it's a little bit of a spike just into close there. No, that was on 10 o'clock open. Okay, so yeah, despite that sort of like sell-off, sharp sell-off thing there, copper, boom, spiked up there. Not following it close enough on that short time. I don't really trade on these short time frames as to why that got such a spike, but we have sort of seen this move up a little bit better here. So I did give it a bit of an effort, test up into the top half here. Again, look, it's just holding this lower zone over here. Actually dropped a little bit lower down to this 50% retracement, but obviously finding a little bit of support and sort of pushing back up here above 433. Then you're kind of looking up at 48, so 500 point move if you want to over there. But as I've been sort of saying more recently, copper's to me at the moment a little bit of a snoozer. I don't imagine any major breakouts. If anything, a little bit of dribbles back and forth of that. I'd like to see it stay in this range to stay constructive, though. I think if you come back down too much below those wicks from yesterday, I think you're probably looking back down at, as I said, 415. As I said on the weekend, I'd imagine you probably sort of find some support, and I'll probably have to look to grab a couple of buys should we come back down to this level over here. And that'll be, again, I think you'll see at the same time a bit of a US dollar rally, bit of a, sort of a bit of pressure on Aussie, and obviously probably a little bit of a weakening of the yuan as well. All right, and quickly just have a flick through the news, which I don't see if anything more has just sort of come out here. No, look, it's pretty light on the news, particularly through Asia. That's another thing I forgot to mention as well. We've got the bank holiday, so it's a week of holidays in China. Um, Golden Week, or is that Japanese? I don't know. Whatever. They take a week of holidays though. So, oh, maybe Chinese New Year. Actually, that's what it is, isn't it? Golden Week's Japanese. Yeah, so it's a bank holiday from China, so that could play into things a little bit as well. But in terms of sort of data and news through today, we've got business confidence for Aussie out in sort of 15 minutes. Negative through previously. Don't give a sort of forecast on this one. CPI tomorrow is what will be on the thoughts, and as you can see, expectation with the Aussie is a little bit up. So again, look, higher CPI is going to be keeping this thing a little bit more bid. So we'll sort of see how things sort of play out. Obviously, it's the tail end of what happens with DXY. With US dollar, so I should say more as a broad sense, but DXY being the sort of barometer for US dollar strength across the market. But should we see a little bit of a sort of a weakening of that, plus a little bit of a tick up in CPI? The talk on the local front between the sort of, well, not between, but with the RBA and sort of, not say the RBA, let's just say the local news, is sort of people sort of going, okay, yeah, the cut in February, this kind of sort of stuff. Those criteria haven't been met. So I'm reluctant to sort of jump into that February cut. I could be shocked and sort of be like, well, okay, maybe they do. But to me, particularly if you've got CPI going up, you've got strong employment data, it's not the time to cut. If they cut now, people are going to go, hey, we've beaten it, it's great. They're going to borrow heaps and the inflation's going to be even worse of an issue. And it's not even down into their targets and what they've sort of stated they want to see before they cut. So, people may be getting a little bit ahead of themselves and sort of, trying to sort of manifest this sort of thing because they're over leveraged. But yeah, we'll have to sort of see how this sort of plays out. But at the moment, I think this is going to keep Aussie a little bit firmer, at least for the time being, unless we get a bit of a shock here or we get a big run on DXY. All right, that's it from me.